Supermicro has become one of the most polarizing names in the market, with Wall Street sharply divided on its outlook. That split is now clearly reflected in recent analyst actions and price targets, which frame both the near-term uncertainty and the longer-term debate around margins, growth, and positioning within the AI infrastructure cycle. On one side of the debate, Goldman Sachs has initiated coverage with a sell rating and a $26 price target. The core of the bearish thesis centers on profitability. Goldman expects Supermicro's margins to compress materially over the next 3 years, falling to approximately 9.5%. The firm argues that the company is sacrificing profitability in order to defend market share, effectively competing in a low-margin hardware environment where pricing pressure remains intense. On the other side, Argus Research maintains a $64 price target, placing primary emphasis on revenue growth rather than margins. From this perspective, the scale and pace of top-line expansion outweigh near-term profitability concerns. Between these two extremes, the broader analyst community remains largely neutral. Most analysts currently carry hold ratings, with a consensus price target near $47, representing more than 45% upside from current trading levels. While major banks debate valuation and margins, Supermicro continues to accumulate a substantial backlog. Management recently disclosed an order book exceeding $13 billion, largely tied to NVIDIA's Blackwell Ultra products. At the same time, CEO Charles Liang has reiterated a $36 billion revenue target for fiscal year 2026, which implies approximately 64% year-over-year growth. To support this expansion, the company has secured a $2 billion revolving credit facility, positioning itself to manufacture next-generation AI factory infrastructure at a scale management believes competitors will struggle to match. Importantly, the company's strategy is no longer confined strictly to data centers. Supermicro has announced new collaborations with partners such as Everseen and WBOT AI, focused on intelligent in-store retail solutions. These initiatives leverage AI at the edge for applications, including real-time loss prevention and customer analytics, expanding the company's addressable market beyond traditional hyperscale deployments. At the core of Supermicro's differentiation remains its leadership in liquid cooling. As NVIDIA's GPUs, including Blackwell and the upcoming Vera Rubin architecture, approach power levels of 1,200 watts, traditional air cooling solutions are becoming increasingly impractical. Supermicro currently holds an estimated 70% market share in direct liquid cooling racks. Management has indicated that these systems can reduce data center power costs by roughly 40%, a critical consideration for hyperscalers such as Amazon and Microsoft, where energy efficiency has become a top priority. Turning to the current market setup, Supermicro's next earnings report is expected within approximately 18 days. Trading volume has remained broadly in line with its historical average of around 24 million shares, and the company's market capitalization is roughly $18.6 billion. From an earnings standpoint, the company has missed expectations consistently since the second quarter of 2025, a trend that has weighed heavily on the stock over recent months. Financially, revenue growth has remained aggressive over the past several years, but this has been accompanied by a meaningful decline in net margins. Net margins have fallen to roughly 4%, down from approximately 8% in 2023, reflecting a significant compression over a 2-year period. While some technical indicators currently read as neutral, several analyst models still classify the stock as a buy, with 1-year targets clustered around $43, implying roughly 38% upside from current price levels. From a technical perspective, the shorter-term picture shows signs of stabilization. On the hourly chart, the trend remains classified as bearish by algorithmic measures, though buyers have begun to emerge. A notable increase in volume accompanied a recent price move that produced approximately 7% upside, suggesting early accumulation. If price action were to break higher and the indicator were to shift from bearish to bullish, the next area of resistance appears near the anchored VU app around $39. That would imply a potential move from the low 30s toward the high 30s in the near term. Beyond that level, a successful break could be followed by a pullback and consolidation before testing higher supply zones. The next major resistance area sits near $53, corresponding to prior highs. On the longer-term daily chart, the broader downtrend remains intact. The stock is still trading well below its March 2024 high of approximately $113 and has declined roughly 70% to recent levels near $31. This context underscores that while counter-trend rallies are possible, the prevailing longer-term trend has been decisively bearish. Anchored VWAP analysis highlights multiple historical resistance points where sellers have consistently emerged. These levels suggest that any rally toward $39 would likely represent the first significant test, with heavier resistance closer to the mid-50s. A sustained move above the longer-term swing high near $54 would be required to materially change the broader technical outlook. Volume analysis at the lower end of the range suggests that selling pressure has been diminishing, while buying activity has gradually increased. A notable spike in buying volume following a sharp downward move indicates the possibility of a developing base. The point of control appears near $29, and with the stock currently trading above that level, short-term price action suggests buyers have regained control in the near term. Taken together, this setup supports a scenario in which Supermicro could rally toward $38 and potentially toward $53 if momentum continues. That would represent a significant move from current levels. Fundamentally, Supermicro remains a high-volume, low-margin AI infrastructure provider, effectively supplying the essential hardware for the most powerful computing systems being deployed today. Whether Goldman